All right, we are live. Welcome back, everyone. What are we calling this? TribeCast, Casual Breakfast Club TribeCast. I'm here with my co-host Carlos Amaya and my new co-hosts Anna and Brian Bialik. Welcome, you guys, tuning in. I know that you guys are all just logging in right now. Put in the chat where you're calling in from. Put in the chat where you are joining from. And as always, if there's questions, any specific topics that you want us to cover, please put that in the chat, either myself or we have one of my assistants on watching, and we will try to get to you. So we got some fun stuff here. But how's everyone doing? I missed last week. It was my last month. It was my wife's birthday. Carlos, you took the realm. And
people said that was the best one. People said that was the best one.
Everyone said it was the best one. I got so insecure. I'm like, I got to come back quick. No, but you guys did awesome. You guys had some of our friends on there. Who came on with you? That was DK and.
Now you're killing because I'm horrible with names. I know this DK.
and was it Nico yet? No, we didn't bring on Nico yet. We have so many people that we want to bring on, but yeah, awesome job. So we're gonna jump right in. We're gonna introduce Anna and Brian. They are amazing friends, and they are the co-hosts of the Arlington Cashflow Breakfast Club, and they have a fun story. We're going to hear a little bit about them and learn from them, their unique perspective on why they started real estate, what they're doing right now, how they've never messed up ever in their life in any deals, maybe once, and they might tell us about that. We'll see. Brian's getting nervous now. We can't talk about that. But yeah, Anna, welcome, Anna and Brian. Tell us a little bit about your origin story, how you got into real estate, and why are you here? Why do we invite you?
Well, I was gonna say you're like the Yoda in this origin story. It's very you heard the story. So Brian's retired Navy, and I used to work for the Department of Navy for almost 20 years. He did 20 years, and so we met at work. And then I decided I didn't want to do that forever. And then I got into real estate and I became an agent. He was like, you can do that. You're like a water cooler. People like to talk to you. And I came across the Cashflow Breakfast Club book. Don't know how it fell in my lap. I read it. And then I read the bio and I was like, oh my God, he lives here.
Then you stalked him.
Then I did. I stalked Omni and I was like, oh, he's in Loudoun. But it was far for us because we're like in Alexandria outside of DC. And then I saw that you were starting a Fairfax chapter, which was like 30 minutes closer. So I'm like, hey, babe, I signed us up for this thing. I don't know what's going to happen. And he's like, all right, we'll sit by the door. And if he tries to tell us, when he tries to start selling us something, we're going to leave. And clearly we never left because the sales pitch never came. And now we're friends.
Yeah, no, it was fun. I remember meeting you at your first Fairfax event. I don't know if that was your first, but the first time I met both of you guys and shared a little bit about what you guys were doing and investing. And you got to share that story. I laugh because I hear that story quite a bit. Every time I go to a new event, I'm thinking about the same thing. Like I'm always questioning, like, when's that sales pitch coming? It usually comes. You go to a weekday event, turns into a 3-day event that's for $1,500, and then there's always something that's $80,000 that they sell you down the road. I'm all for education. I pay for a whole ton of education, so I'm not saying there's anything wrong with that, but most people starting out are probably not ready for that. So one of the reasons why we want to create this Cashflow Breakfast Club is so that we could provide a free option for people to get started, learn, but probably more importantly is the community. We have amazing communities throughout each of our locations. Carlos runs an amazing community, Charlotte, right? So Charlotte, him, his wife, his daughters, it's really a family event, running their event. And every single month they're able to get like really, really good people coming back, some of the same people coming back, new people every single time, and just seeing the comments coming from them. What's some of the keys that you've seen, Carlos, of running and building a community from your end before we jump back to talking about Arlington and what they're doing out there?
Totally. First of all, I want to say congratulations to Anna and Brian for working as a family. I know how it is. It's beautiful sometimes and beautiful not because you're 24/7, so when things are going well, it's great. Or when things are not going well, then you have to deal with it. It's not like, okay, I'll deal with that tomorrow.
We've never gotten at each other's throats, ever.
Never. So, ever. Not in camera. So I'm just want to congratulate you, because definitely we see that, and that's something that I think is a pattern across our club. We have a lot of family members that are going into real estate together, and sometimes are like a mom and daughter, like brothers, sisters, cousins, and I love that, and I think that's one of the things that you're helping us do. People that really want to get into real estate. Again, I'm echo what you said before. I'm all for education, and we've been paying for education, and I think it's worth to pay for education whenever you're ready. But a lot of people just ended up just getting the analysis paralysis, and I think one of the roles in our clubs is to try to get people educated, but just take action. That's what I really enjoy about that, and that's what I see in our club. People that you still want to just consume the information, which is great, and it's a lot of it sometimes. But then just the next step, like now it's time to just like the I don't know what the name of the bird, but just push it, like just go flight. And I think that's what it is. That's what I'm seeing it more and more, and especially in like we have a diverse community here in Charlotte. And we have all of it. We have people from all different like countries, different languages, different cultures, and I think that this is a way to create community, and knowing that we have the same goals, which is to just look for our American dream, which is get financially free to do whatever we want to do in our lives. And I think it's great when we do it as a family. It's not easy, but it is worth it.
Love it. And I think from a leader standpoint, one of the most frustrating things I come across, probably each of you feel the same level of frustration, is we pour our heart and soul into it. We teach, we try to help people down a path, and some people take action and some people don't, right? And you just want to just do it, just jump in. Sometimes you're like, man, is anyone listening? Is this even worth continue to do this? And then one person tells me their story. I'm like, man, I just bought my first property, or just made my first offer, something along those lines. And you guys were some of those people. You guys were taking some action, but then you jumped in and did some pretty big things. What gave you guys the confidence to jump in and start investing in real estate? And then let's talk about what you guys started to do from there.
So I think when we started, we were accidental landlords. We bought a COVID house in North Carolina outside of Wilmington, and we're like, it's an investment property. But I'll be honest, I didn't want people staying in my house and moving my trash can.
It was her beach house, and she didn't want to share it with anyone.
But it was an investment. It was an investment. But then we started coming to the club, and we started learning all these terms, and we were like, okay, what can we do? And I mean, we were both on board. We found something, because we used to work together when we worked for the government, and we worked really well together. And then we found something else that we were really excited about. I guess we got married. We were really excited about, which was real estate, that we actually both really liked and could do together. And we're very yin and yang. We have different perspectives and different modes of working, so it complements well in this space. You were going to say something. And
I was just going to say, yeah, I mean, once we made the decision to just, all right, all in, then we went really all in and decided that, hey, let's also do it out of state, because that won't be hard or complicated at all. So we'll start there. And that's how we got started.
To be fair, we were new, and we were like, and are we allowed to curse? Am I allowed to use
a
bad word? So I said this to several people. I said, if we're going to fuck it up, we're going to fuck it up with a $100,000 house in Ohio, and not an $800,000 house in Northern Virginia, which is where we are, where it's really expensive to even get into a fixer upper that needs to be gutted. You're spending at least $500,000 just to buy a shell of a house in a lot of cases. So that's why we were like, okay, let's go out of state. So going to the Cash Flow Breakfast Club meetings, I'll be honest, like that, and talking to you was part of what gave us the confidence to start looking at markets. And you were willing to help us underwrite deals. And like I tell people that come to our meetings, I said, if you put in the effort to come and ask questions, we will put in the effort to help you and like underwrite deals and go forward. Like if you come once and we see you once in a blue moon, right, wrong, or indifferent, like you're not investing the time. So why should we invest the time if you're not willing to invest the time to show up? And I think we did, and you were willing to invest the time in us, and like, here we are.
Love it. So Casey's calling you out from the chat there for your potty mouth. Thanks, Casey. For on track there. We got some awesome. We got all over. We got Northern Virginia. We got some Richmond. We got Tanya, Sean. Welcome, Sean. We got Kevin, all the way out in Stevens City. Andrea, Sadhu, Casey, Joseph, Juliana. Welcome, everyone, for joining us.
I have a question. If I may. So I did a show back a couple of years ago in my podcast where I was showing it was in a study by NAR, National Association of Real Estate, the real estate. They was showing the real estate professionals do not invest in real estate. It's like 85% of real estate agents do not invest in real estate, and if mortgage broker, loan officers, and mortgage brokers, attorneys, inspectors, they don't. Even though we are within the industry, and I was one of them for many years. So that was my question. So when you start as a real estate agent, you say, okay, we're gonna go all in. Going to go out of state, and you have your state in where you live right now. What was that initially? Whenever you get a license, for the people that don't have any license, real estate is mainly like just not about like the basics and just like the ethics and in a fair housing, how not to get in trouble. But it's nothing related to investing. And then you continue doing continuing education, but it's zero about investing. So that's why a lot of real estate agents just focus on the first-time home buyers because they don't have the background or the knowledge. In your case, you were like, and I always say this: God put Capital Breakfast Club in your path, and you guys follow it because you might have the sign, but you don't follow it. That's how nothing happens. How was that transition, or how did you see initially just working out as a real estate agent? How was your career, and then how do you see it now when you transition to real estate agent and investor as well?
Oh. So when I started, I left the government and became a real estate agent because I said, I can make large amounts of money and kind of create my own schedule and be my own boss, which was baloney. They don't teach you that you got to actually like build a business. I didn't know anything about real estate investing. And you're right, they don't teach us anything about it. But I very quickly realized I was still working for money. Like I left a W-2 job working for money. I'm still trading time for money, doing real estate agent type stuff. And I was like, what can we do? What can I do that's going to change it? So I'm not always working for money. That was why I left my W-2. And then real estate investing came into play. And so initially I didn't have any like intel. I didn't understand real estate investing. I didn't have any knowledge. And then as I've learned more about it, I've kind of pivoted. So with my clients, now I talk a lot. I don't necessarily work directly with just real estate investors, but I like teaching my clients about real estate investing. When I have those first-time home buyers, now I look at a property and I said, this may be an accessory dwelling unit you can add, or this basement has a walkout. Have you ever thought about maybe renting part of the house to pay off part of your mortgage? Because it's really expensive here. And then I've had listings where I've talked myself out of listings because they have zero debt. Capital gains taxes would kill them. And I'm like, well, have you thought about, renting it out or maybe doing seller financing? And these are all things that now I've started to roll into my business, which makes me stand out because I'm providing these options that most agents don't think. Most agents I know don't think about capital gains taxes. If someone wants to sell a house, they're going to be like, let me put my sign in the yard. Yes.
Most agents also don't willingly give up a commission for the long game and for the benefit of your clients as well.
Yeah, no, that's you mentioned something that's funny because I was in the real estate brokerage world for many years as well. Haven't been talking about it a ton as of late, but I remember that exact phrase that you get to be your own boss, which I love. But the reality that you are correct, you are your own boss. You just realize you're probably a terrible boss right now because you've never done it, and you probably have a terrible self-employed employee. And so those two mixtures are always difficult. So finding the right structure to be able to do that as an agent, and that's hard enough. And then a lot of people get into real estate brokerage world as an agent because they have interest in real estate as an investment. But then they forget about it because it's hard, right? Just building your business is hard. And 3 years, 5 years, 10 years, 15 years later, you're looking back, maybe you started to build or you have built a very successful real estate agent career, but you just kind of forgot about being that investor, right? You're putting your clients first, which is amazing. However, you should always be first in terms of like your family, your financial future, figuring out what's the next step for you. So how have you guys kind of made that focus? I know that you're passionate about this discussion. You and Nico run a podcast, right? Agent to Investor podcast, which was a great podcast. I've been on it and listened to it a few times. So what's your focus, and you talking to someone thinking about getting their license, or maybe a new agent that's been in for a year or two? What's your discussion with them to help them understand like you can start investing now, and maybe what are those first steps that you're typically encouraging them to do?
So I know when I'm talking to them, I mean, we were lucky we were in a position where we had a home. We were able to tap into our home equity line of credit. And so we had like a cash source. I tell agents all the time, we're like insider trader. It's like stock investing. We're insider trading and it's not illegal. So like when you come across these deals that pencil out and you have clients that need solutions, because a lot of people, sellers don't know what solutions they have when they're in distress. It's going out and finding these sellers that are in distress. And if it's a property, like I tell a lot of agents, if you find a good deal, like money always appears. Like people make money like the number one issue, but I feel like finding a good deal is usually harder than finding the money once you find the good deal. So I tell agents, we tell them on the podcast, go to the meetups, surround yourself with investors, start talking to people. So like start thinking about how you want to build your future. If you don't have money to buy a property like a duplex or something, start with house hacking. Like you mentioned Nico, who is the Montgomery County Cash Flow Breakfast Club host. He bought a house and like he turned the downstairs into an apartment that they do midterm rentals. And then the other thing I tell them is go pick up the Cash Flow Breakfast Club book because it gives you lots of good ideas about being an agent and how to kind of start building your business as an agent with real estate investing in mind. So I don't know. There's so many tools out there.
And it teaches you how not to live under a bridge.
It tells you.
Hey, that's a good option. If you got to live under a bridge for a little bit, if you're saving money, could be a good option. It works easier when you're in Hawaii, apparently. Awesome.
It's a little cold here.
Yeah, too cold. We have some more people joining us. What's up, Jose Marin? What's up? We got Justin from North Carolina, Felicia from Austin, Texas. Just saw you out in Florida. We have a few people from our mastermind there. Maybe we'll chat about that a little bit later as well. What lessons have you learned several years in as aggressive investors? What's going well for you? And if you want to share what's not going well, because we learn from our successes and our failures, share as little or as much as you want.
The failure story is definitely the better story.
All right, let's go there.
So the lesson there is if you're thinking about taking an action, you probably should have done it 6 months ago. You're probably too late. And how that plays out is we had a fourplex from hell in Akron. We had multiple bad property managers. The first one we got wasn't bad. We should have fired her a year before we did. So she placed us with rough tenants. We didn't vet her well enough. So mistake number one. We didn't know what we didn't know at the beginning, exactly how to vet property managers fully and correctly. So once we got rid of her, we got an actual company to come in and start managing. They inherited the tenants that she had placed. And they weren't great either, because while they had processes and procedures in place, to some degree, they didn't communicate well. And we got to the point where we fired them as well. But at the same time, we sold the building. So the reason we sold the building is we had someone that decided to barricade themselves in the common area in the stairwell, and SWAT had to come to break the front door down with a battering ram, with one of the vehicle battering rams, not just one of the man-carried ones. We think allegedly there was one of our tenants was running prostitution out of her unit. The last tenants to leave shot out all the windows of the building with a BB gun, so we had to replace all the windows. They poured floor glue down the drain and the toilet to basically destroy the plumbing in the unit as they left. And then somebody came in and stole appliances.
They broke in.
They broke in and stole appliances.
So what was the name of the movie? Okay.
Exactly, right? You can't write it. You can't make it up. All of this because we failed to vet a property manager, and in turn failed to vet the tenants that she placed.
So
now
important.
I just manage them myself.
And yes, so now we're self-managed.
So let's follow up with that. So someone with a quarter of the situation that you went through that you described, what would just give up? like people have give up real estate for a lot less than that. In your case, how did you guys decide to continue? And obviously, I kind of have the insight in terms of what you guys are doing right now. But before we get there, how did you decide? You know what? This is it. I mean, we fail on, like you mentioned multiple times, and we didn't vet the management company, we didn't vet the tenants, we did the proper procedures. But how did you guys decide? You know, I want to continue, and instead just give it up. Like, you know, this is not for us. Like so many people, you know, the industry sucks. Real estate is not good. Whatever they sell us on TV or whatever it is, that's not how it works. And I'm just quitting right now, and I continue. How was that conversation? How did you guys were able to do it, and what came next?
I mean, it wasn't easy. There were many days where I'm like, "F this noise. This is ridiculous." But you pay for education one way or another, whether you're doing it at school or whether you're making mistakes. So we've had other positives as well, and those positives have certainly balanced out the negative. And I think we've at least taken accountability for our own mistakes and recognized that it was preventable. And you know, we could have been smarter about it, but we were first starting out. And so our strategy to go screw up in a cheap market rather than an expensive market actually kind of worked.
So I can't tell you how many people I've heard similar stories to, and this is the only deal that they've ever done, and they're never doing anything else because it turns out real estate doesn't work, right? Is what the lesson that they learned. It wasn't their fault, it was everyone else's fault. So outside of pain, suffering, headaches, what sort of tuition did you guys have to pay for this mistake?
So the
what the total bill was?
Money.
Lots of
you
money.
paid for an education. If you don't want to share, that's fine. But
rather than making money on the building cost us about $40,000 over 3 years.
Yeah. So your net negative 40 grand possibly on that deal is what you're thinking.
Yep.
Yeah, that's an expensive mistake. Less than college, but all right, another year in college maybe. How are you using those?
I'm sorry, and that's just the material, because 3 years of pain and suffering.
Yeah, brain damage.
The return on brain damage was.
It's even a lot more hard to quantify. I'm sorry. Go ahead.
Kevin just commented half of the flippers in Richmond only do it once because it's a education that they're paying for and they're not willing to move to that next step. Absolutely. So what are you using from that lesson, and what are you guys shifting to? What are you guys doing now that's working, or what are you guys excited about personally in real estate?
I mean, so I guess I took over the property management. I manage all of our properties, regardless of whether they are. We have some still in Ohio. We have Southern Virginia, which might as well be another state, like way south, like past Richmond. And we have the house in North Carolina. So now I manage those internally. And I guess I learned through the process of like, okay, I feel like I tell a lot of people, if you can learn how to manage a property yourself first, then you can then you know what to ask for in a property manager. Then you can set your expectations because you know what they are. So I've put in processes in place to vet tenants. I use a lot of my agent tools that I have access to as a real estate agent to also vet tenants. Now I know how to do it for myself and for like rental clients as well that we are helping out. So just that, I have like a Google sheet that I have prospective tenants fill out before I even show them the property. It has basic questions. And I'm like, okay, if they can't even follow the simple directions of filling out this Google sheet before I'm willing to set up a showing, I'm not willing to move forward. I don't need to like bust my head over something. If they fill out the Google sheet, we set up a showing, then I have them go through the application process, and then I vet and I call everyone. I double check. I look in Deal Machine. I look in an app called Forewarn that I have access to as an agent to do, because some people lie. They will say, this is my old landlord, and it's like their cousin. It's not. So she
has a knack for sniffing that stuff out.
I do. Too. I'm like, this doesn't seem right. I need to dig into this. So I have created a very, what I'll consider pretty rigid screening process for tenants in order to make sure that I don't have to do it more than once. And I am willing to let a property sit a month or two longer for a good tenant than to rush to put a bad tenant in it, because that's going to cost us more in the long run. We've definitely learned that lesson. It is much more expensive to put a bad tenant in right away than to wait a couple months and miss out on a couple months of rent.
Yeah, when we talk about long-term rentals in the Cash Flow Breakfast Club, one of the key notes, or maybe it's the burr, it's worth it to wait for the right tenant. I mean, you don't want vacancy of a month, 2 months, 3 months, but it's absolutely worth it. Sometimes you get an application on day one, you're so excited because you've been stressed out up until that point. But just knowing through, like, we need to vet it. We need to put the right people in there that are going to take care of our property. They're responsible, and there's certain ways. There's no way for 100% sure that we can know, but there's indicators that we can look at that give us a clue on whether or not they will be a responsible tenant or a nightmare tenant that's going to cost a lot of money in the future. So I heard a couple of things in there. You had pain, and you created a business around solving your own pain, and now you're solving the pain for other people as well, right? So you are a full-time real estate agent. You guys are real estate investors, and now you are getting into the property management business, correct?
Yep.
Yeah,
Walk
we're doing
through
that
that.
for some friends.
Okay.
And I have a question about that. So, 3 different roles. So you have the real estate agent, directly with the clients. You have the management company for yourself and for others, and also you have the investment side. How do you define the roles between you two? Because one of the biggest complaint people that want to do it all is that you get so overwhelmed. So you ended up like just managing the property, but at one time you're going to be prospecting, and then at one time you're going to be making offers, and then you ended up not doing it. Like you're trying to do all at the same time, you might not ended up not doing it all, like none at all. In your case, as a team, how did you guys decide to divide the roles, and then what kind of team did you guys been able to form so far?
So that's a work in progress.
Yeah,
I will say
sure.
that because he still works.
It's always a work in progress.
He still works his full-time W-2. So I kind of juggle most of the plates most of the time when he can come out of
changing.
But it is changing. That's like the next phase is like now he's going halftime. Like we've gotten to the point, we've looked at our financial, we looked at our numbers, and we're at a place where he can now go halftime and start taking on some of these roles. But and that's happening like in the next like 2 weeks that he's going to start transitioning into that halftime role. And so I think he's probably going to take over more of like the property management, like maintenance type things, because that's more his forte. Usually I'm calling him and I'm like, the handyman said that this is the problem and I don't know what this means. What am I supposed to ask? And I do more of the people part, but up until this point, honestly, I was handling most of it during the day, and I was spinning lots of plates. I'm sure I broke several plates along the way. And like my agent business, I will be open, kimono, last year suffered because I was so focused on the rental portfolio and trying to keep that afloat and get my processes in place and figure out, like, managing the manager took so much of my time. I didn't focus on my agent business. So that suffered. And now this year, my agent business has like taken off. And I'm like, dude, I need help. I cannot do all of these things because I'm going to break a lot of important dishes if I don't get some help.
Yeah. So at the beginning, I focused on like the acquisitions and searching out the off-market deals and trying to get those under contract.
Yeah, he'd call me. I'd be out of state. He's like, "Hey, babe, I bought you a house." And
yeah, she went to a conference one weekend, and I went and bought a house under her name while she was gone for the weekend.
Yeah.
So I would do that part, kind of like what Martin does to Casey all the time. But now that I'm getting ready to transition, I am going to take a lot of the day-to-day operations so that she can still focus on tenant placement and work her magic in the voodoo that she can run with finding and placing tenants. And then I'm going to kind of take over from there. And so I'll work for her instead of working for the government. So it'll be fine.
Love it. So you made this $40,000 mistake, and that gave you the confidence to say, yeah, we could do this at a higher level and maybe make less money in our W-2. So you learned something.
Yeah, what could go wrong?
You're going halftime, so you're shifting. So I love that transition. Some people like quit their job right away. A lot of people talk about like you just jump into real estate. I'm one to say, if you have a good job that you love, stay in it for as long as you can. If you have a good job that's paying well that you don't love, is there a way to transition out of it? Because these are not jobs you're jumping into, right? You have three businesses you started. You have the real estate agent business. You need a boss, which is you, and you need an employee, which is you. And you may be a good employee, but a bad boss. You may be a good boss, but a bad employee. You need to be good at both of those for that to be successful. Then real estate is a business. You need a boss and employee. Once again, you might be good or bad at one of those, and you got to figure out how do you get good at both of those. And property management is another business. It's not a job. You're not working for somebody.
Sorry, babe, I'm a bad employee. I'm going to work.
So kudos to you to doing that. So while we're on this topic, Tanya had a question. So what are some of the indicators to look for to help determine if you have chosen a decent tenant?
I guess that's me.
That's
so I mean,
definitely you.
before I even choose the tenant, like I do the standards, like I have written criteria, which is something we didn't know in the beginning when we had our first property manager. Like, you know, this is the credit score. We don't accept anything below this credit score. If it's close, we sometimes ask for an additional deposit, and it depends on the market. I'll say that, because down in Southern Virginia, the credit score is a little lower than what we would expect for someone up here in Northern Virginia. So we have a credit score. I asked for 5 years of residential history. I looked that through. I asked them questions, and then I mentioned earlier, like Forewarned, and I'll look them up because it'll give me Forewarned is an app that as an agent in Virginia I have for free, but you can pay for it. But you can put in a phone number. It'll pull up someone's name. It tells you like criminal convictions, if they've had evictions against them, speeding tickets, addresses, prior addresses, vehicles, phone numbers. And there's been times where like addresses pop up that don't match what they're saying. So sometimes I'm like, hey, what about this address? And I've had people that are like, how do you know about that? And I'm like, interesting. So I look and make sure that their application matches the information that I can find. If there's like inconsistencies in addresses and phone numbers and people that they're saying are their landlords, like the good people will provide, they'll have a good credit history. They'll have no evictions. I look for no evictions. I call the references. I look for job stability.
At least two landlords back.
At least two landlords back. That's why I asked for 5 years. Sometimes someone's lived in a place for a really long time, but I asked for at least 5 years of rental history because I don't want to just talk to the current landlord. I want to talk to the one before that because the current landlord may be trying to get rid of them too.
Kevin actually just made that comment. Really good comment. Never trust a current landlord referral. They will lie to try to get a bad tenant out of their property. I'm not saying we've ever done that, but I'm sure my property manager probably has done that as well. So asking for knowing the history of where they've been. So you want to talk to hopefully a few people. The current landlord they might tell you, right, hopefully they're just going to be honest. But if anyone has the incentive to not be truthful, if they have been a bad tenant, sometimes it is that existing landlord.
Yeah. And then something that I found, at least for me, like I mentioned the Google form, like I put little Easter eggs. I learned this from actually DK, who was on last month, from their stories. And like in my listing or in the form, like I asked them to respond received. And I'm like, okay, they're answering, they're reading thoroughly. They're like doing what I'm telling them to do. That's usually a good signal when someone is very communicative and they're actually following through on directions. Like it's kind of a first like look at someone. And then I do the thorough background check. And if they're like very quick, like we just had somebody who we just signed a lease for. She was very communicative. She reached out right away. I mean, she even like came and like FaceTimed with her mom to like show her the property so her mom could like see it. And I was like, oh, that's so sweet. But she paid, like she signed the lease right away. She paid her deposit right away. And she's not even moving until like, well, we gave her a little bit of time, but August. But she was like, I'm willing to pay the deposit right now. I'm willing, like no issues. So I don't know. Some of it's a gut check too. I'll be honest. There's a reason we get those little feelings in our gut and we've learned to ignore it. But when you get that feeling that something isn't right, 99% of the time, that's one of my first indicators with an application. It's like something doesn't smell right here. And then I usually dig in and I can usually find a reason why it doesn't work out. I don't know if I answered the question correctly, but
Yeah, no, that's good. I want to double click on something you said. It kind of depends on the area. Like when I started out and I started investing in different markets and different price points, I kind of had my, like, here's my standard. Here's what I want as a tenant. And you realize it has to be relevant, relative to the area, relative to the price point. So if you have a $3,000 rental, your standards are probably going to be different, probably should be different than a $800 or $1,000 rental. Just that tenant pool spending $800 or $1,000 might on average not have the same level of credit as someone paying $3,000, $4,000, right? So might not have the same level of job history or job stability or things like that. So it is relative. So it is hard when you go into a new market. It's setting up a new team, but it's also understanding what is the standard for a grade tenant that I'm looking for this market, and it may not be the same standard I'm holding to another market at a different price point. Really good thoughts there.
And also, go ahead.
Sorry, go ahead.
No, go ahead.
I was going to just answer the question from Marin and Jose about government assistance programs. The first set of tenants that we got with the first property manager, they were not Section 8 government, but they were agency assisted, like transition living. So someone who aged out of the foster system, and someone who had gotten out of prison and was transit, but our landlord failed to tell us that the prospective tenant was just getting out of prison and was part of a transition program. So I think at this point, we will likely choose not to rent in C-class or below neighborhoods.
I have a different answer.
But so that would probably take a lot of that out of the picture. We certainly wouldn't discount it right up front, but we will be very selective based on history.
So you guys had one. You guys had one tenant. That's one you inherited. That wasn't Section 8, but on some sort of assistance. So you've had four. Okay.
Yeah.
Well, they all weren't on assistance. Don't get me wrong. They all weren't on assistance. 3 of the 4 came through on assistance.
Yes.
Got it.
But I was going to say, my answer is slightly different since I do a lot of the day-to-day management and I'm an agent, so I know a lot of the rules. Is I just won't change my rental criteria. So if they have assistance, but I still have a minimum credit score, I still have a minimum tenure of how long they need to have stability in a job. Like if I keep that consistent, that also helps me avoid fair housing issues.
Oh yeah, we weren't going to violate fair housing.
So we will not lower our standards just because they're government assistance or not. This is our rental criteria, and that's, I think, one way to keep ourselves, like, I guess, safe from fair housing issues, and also just kind of like weeding out like the tenants, the good from the bad. If you keep your standard, it makes it much easier to do that. And that's something we didn't know in the beginning. Our first property manager was like, well, you can't really go off a credit score because so many people here have bad credit scores. And like, she was just kind of very wishy-washy about it. And we should have taken, well, that was one of our first red flags, like that we didn't follow right away. And now I know that's BS. I want to follow a minimum credit score. And I look at their credit history. Like, they may have hit a bump and their credit score may have taken a hit for it. But if I can see that over the last year or so, they've consistently been making their payments again, I'm okay with that. If it was like last month, maybe they've turned the ship around, but I don't want to be the science experiment to find out whether or not they've truly turned that ship around with like fixing their credit and stuff. But if I can see that they've consistently made an effort to fix their credit over the last 12 to 18 months, those are the ones that if they're like at 580 instead of 600, then we will consider it. But I let them know up front that if you're below 600, but you're in like that 575 to 599 range, we require last month's rent as well as an additional deposit for risk mitigation.
Yeah, most people don't know it's not just a credit score, it's a credit story.
Yep.
And that story can tell you a lot. And you're exactly right. Depending how everyone goes through something. We've all gone through something that could have affected our credit at some point. And, sometimes there is a judgment call on, is this far enough away? And is that something that might not be affecting what they're going through right now? Like sometimes you see delinquent, payments, and it was medical bills from, 4 years ago. And okay, that has happened. But there's been a consistent, payment history through there. They just haven't really built up the credit to where it needed to be yet. So, I love that. I think most of my properties know something similar.
Yeah, and that's when the experience and the system come to place. Like I love what Anna said, because that makes that's smart. That we do that as well. You start the interview since the beginning, way before they're ready to meet an application. The way they respond, when they give an instruction, they follow it, and then obviously life happens, and then like you said, I mean, all of us have any situation and any thing that happened with a credit or life or anything, but how did you react to it? And then obviously, yes, I'm all for second choice, that giving people the second choice, but it has to come up with a story. Like, you know what, like, okay, so this was happening, but that not submitted the paperwork on time, that not giving the right documentation, all of that, that's the sixth sense that you said, I don't know, this is not smelling nice, and this is smelling wrong. But if it's only the credit, but everything looks great, it's working, and all those things, so now you understand, okay, that makes more sense. Let's figure out how to make it work. So sometimes, unfortunately, and I read some of the comments, because we're so blindfolded, we want to put someone like a body in the house because we don't want to lose another month of rent. That's when you make the mistake, because the signs are there. Like if you realize, if you look at it, yeah, credit score is one criteria, but all of them are telling you the story. The point is that a lot of landlords, and mea culpa, because I've done it in the past, we kind of oversee that because we want to give the benefit of the doubt, because reality, we just want to get the check next month. And I think that's why you have to make sure that you don't make that mistake, because then otherwise you can end up with a horror story like you guys have, or eviction or something like that.
Yeah, I agree with looking at the whole story, because I've actually had an application once that they met the minimum credit score. They actually had a decent credit score, but something wasn't making sense. And like I keep saying, I keep using my tools, my agent tools. Like even for like when they say this is my landlord, I even put that number through Forewarn to make sure that the name and the number match what they're telling me. And then I look up the address of the property they claimed was their previous rental to see who the owner is, to see if that name matches. So this person had a decent credit score. Everything looked good on paper. And I was actually like going down the rabbit hole of like, I think we might rent to them. But then I pulled the thread on the addresses not matching. And then I looked in Forewarned, and their landlord was like 21 years old. And I'm like, wait a minute. And then I realized that they had lied on their application. I don't know why they lied on their application, but now I've included in my application that any falsified information on the application will automatically disqualify you from the tenant possibility pool. So I agree, the whole story matters, because some people do have a good credit score and a good story, but you pull the thread and then it falls apart and they're lying about something for some reason, and I don't want to know.
If they have a story on day one, guess what? They'll have a story month 1, month 2, month 3. There's something that I've shared this in my club multiple times. I attempted to be a property manager at the very beginning of my career, and I found out I was the worst property manager in the world, because they tell you stories about why they can't pay rent, something's going on in life, and I was like, oh, that makes sense, maybe you shouldn't pay this month, right? So like I was like too much of a pushover, so I realized I had to hire somebody that hears these stories, says, okay, you still need to pay rent, or here's what's going to happen. Because ultimately everyone can find a story. We all have reasons why we can't do things. But if we absolutely have to do them, we find a way to do it. Right. So love that. So my general, I started as a real estate investor, and then I became an agent and broker, and I spent a lot of years in that world. But if someone asked me, should they get their license to become an investor? My general answer is no. I don't think you need it anymore. It helped me in my unique situation. It helps a lot of people, and some people benefit. But it sounds like it definitely helped you. You're using a lot of the tools, and you might have a different perspective. If someone's thinking is a real estate investor or thinking about becoming a real estate investor, and they're also thinking about becoming a real estate agent, what's your general conversation or advice to them?
I think initially I tell them to run the numbers to see if it's going to make sense for them, because there is a cost to being a real estate agent that you have to maintain, and you have to take your continuing education and keep that going. For me, I think it's worth it, even if I wasn't going to continue actively selling real estate, because I have access to all these tools. I probably would not have learned how to read a contract and know all the ins and outs of the laws the way that I do now, because I'm an agent. My broker has classes all the time. So I learn about all the property management changes and the fair housing rules and all that stuff. That's why a lot of self-managing landlords get themselves in trouble, because they don't know those rules and regulations. I think as an agent, I have access to that. And if you're like in a relationship like us where he has a W-2 job, I knew you were going to go that. You get the real estate professional status, and you can get some really good tax savings. So actually just the tax savings, if you do it right, might be worth paying for your license.
That might be
it definitely does. Huge. If you're an investor, that's a really good point. If you're filing jointly, someone has a W-2, being an agent. Now you can potentially get real estate professional status without being an agent if you don't have a full-time job yourself. but that makes it so easy, and the tax savings. We updated one of our calculators recently to show the bonus depreciation potential on cash flow. So if we have time, we might get into that maybe today, or maybe next month. But yeah, Carlos.
I agree with you 100% of the real estate agent for the real estate professional, even though you can do without it. And someone asked me that question recently, and my answer was like not everybody is built to be an entrepreneur. Not everybody is built to be a real estate agent. Like in your case, I can see, Anna, you like to talk to people, you like to read, you like to do a lot of stuff. Like your profile, like a real estate agent. I'm not saying that that's all that you can do, but like you kind of feel within the profile. So many people will not. So people that don't even like to talk to other people should not be a real estate agent. So the guy that came to the club and asking me, he was like a W2. He was like hype, like W2 hype, like he became great money. He like, I think I'm gonna get my license because I want to invest in real estate. And that's asking me a question. He doesn't like to talk to people. One of the guys that have to pull him to have a conversation. And I was like, man, and I just like paint the pictures. And this is what a real estate agent is. It's a business. That's why you have to do prospect. You have to do all of this. Are you willing to do that? And he was like, that sounds like a nightmare. So that's what it is. You need that to be a real estate agent. It helps, yes, if you like someone like you that's willing to learn and like to talk and is like an extrovert, and that's great. But for someone just to become real estate investor, sometimes even in liability, you have to disclose and everything. You have to follow the rules. I'm not saying that when you don't have a license, you should not be fair, but yes, but you don't have to do all the due diligence and everything. You have to do because you are not managed by the rules that the real estate division it looks the way you behave. So I love that you asked that question, because everybody, like not everybody, a lot of people that get into real estate investing, they go to a real estate agent first, and they pay for MLS dues, office dues, all the dues for like 3 or 4 years, and they're like, this sucks, and they don't even enjoy it because unfortunately they were now built to be a real estate agent. I think you have to realize the same thing like people like you just mentioned, W2. Not that many people, not everybody's built to be an entrepreneur, and sometimes it's the biggest mistake just leave the W2 and become an entrepreneur, because it's a nightmare, because it's hard. It's not really easy if you don't have what it takes to be one.
Yeah. You need to just tell that guy he's got to marry a real estate agent or somebody that wants to become one.
Totally.
There you go. Cash for Breakfast Club benefit. Go find someone
there you go.
doing it.
Just come here and just get married in real estate professional status. That's
Cash Flow Breakfast Club dating game.
I love
fantastic.
it.
That's a new business. Okay.
So let's shift just for a few minutes. We all get, as leaders, whether it's on a one-on-one, a coffee meeting, or in the session, like in my sessions, I usually spend anywhere between 5 minutes and 20 minutes sometimes just talking about economy, talking about what's going on in the world, whether it's a news cycle, and then bringing that back to like, how does that affect me as an investor? Because anytime I see something going on in the world, I always try to put it through that lens. Like, what decision do I make or not make because of this thing going on right now? So what are some things that you guys have been seeing for, the last few weeks or months? Carlos, Anna, Brian, and then those of you guys in the chat, if you guys have questions that you guys want to talk about, put it in the chat as well. Anything's open, world economy, anything that you want to talk about, and maybe try to tie it back to real estate. But Carlos, what are some things that you get questions on or come up in your club in Charlotte?
Yeah, I love that question, because what happens is that people get inundated just watching the news, and they get analysis paralysis. So that's what I say. Like, I stopped watching the news a long time ago. I don't know, like 3 or 4 years. I'm informed myself. I tell like 15, 20 minutes. I have my sources and I know what's going on. But you have to realize that you have to you have to get obsessed with whatever you can control. I mean, can you control whatever the president is doing? No. Can you control the whole economy? No. Can you control how can you vet your deals, and how you run your numbers, and how many prospects calls that you're making, and how many real estate events you go to? Yeah, you can control those. So and yes, I try to just be as informed as possible. I think we are in a great moment in terms of like people feeling good with the economy and good with the way this president, without any political affiliation, this is running the country, because it seems the economy is going in the right direction. But it doesn't mean that if things were going the opposite way, if I was looking at different, I mean, I should not be investing, or people know we should not be doing the essentials. I think more than just be worried about what's going on in the news, you have to be worried in a local market and what's going on in your daily activities and daily basis. And the daily activities to be able to get results. So I think the way I see people right now, that they feel comfortable with the economy, obviously they're not crazy about the rate. Hopefully they come down soon. Who knows what's going to happen? But I just try to like invite people to not be so focused about the economy and just what the news and all the different outlets, because if you do that, you're going to have a very miserable life, unfortunately. I mean, I'm not saying live under the rock with no information at all, but just don't go to the other side, which I think a lot of people do.
Yeah, we've been talking a lot about the K-shaped economy. Like probably every single month for the last 6 months, we kind of bring up that topic because we hear that some people are like, economy's great, I'm doing great. And you have some people saying economy's terrible, the worst ever, and I'm doing terrible. And that's the K-shape. That some people are on this upward trajectory, some are on this downward trajectory, and some associated with politics, some associated with, economy, everything going on. But really comes down to, if you want to be on the upward end of that K-shaped economy, there's only one thing that gets you there. It's the people that own assets feel like it's a good economy because the economy is doing what it's doing, whether we agree with it or not, and the policies in place to put it there. There are a lot of policies in place that are deflating our currency, right? And so we're causing inflation, and assets go up in value because of that. And so if you own assets, it's going up in value. You're like, economy's great. If you own no assets and everything's just going up in cost, and you have nothing to show on your balance sheet that's going up with this crazy economy, you are absolutely on the lower end of that K-shaped economy. So like the game is like, just go buy some assets, because you can get angry about inflation. It's not going to change it. You get angry about policies. It's not going to change it. The only way to win in this economy, and almost any economy, is own an asset, hopefully multiple assets, because nothing you're doing is making those assets go up in value unless you're like manually adding value yourself through a renovation. But just owning the assets goes up in value through no effort of your own. That is 100% the economy, and so much of that is policy based, and so much of that is government spending. And you can have a positive view on that or a negative view on that. It's still going to cause that asset to go up in value. What about you guys? Anything that pops out to you guys that you guys hear that people are excited about or concerned about, or you guys chat about in Arlington at your club or in your one-on-ones?
Yeah, I was going to just say, and Nico mentioned it too, there's been a lot of discussion about, what's the Fed going to do, the new Fed chair, this, that, and the other thing.
Kevin Warsh. Day one, he lowered the rates, right? Isn't that what happened? He cut it in half. That's not. I thought that was the deal. I thought that is what he's supposed to do. He didn't cut the rates in half on day one. No,
that's not how that works. Despite the fact that they tell people it is, but it's not.
And then the other big topic has been, of course, Iran, right? What is or isn't doing to costs of supply chain and other things, materials. But overall, I would say that that segment in most of our events has been very engaging. Like, that is the segment that people will start talking to each other and offering different perspectives. We saw it at yours last month, and then at ours just a week ago. The engagement across the table to each other, to the between the attendees, and you can just kind of step back and just kind of launch one in every now and again to just keep the conversation going. And that's a fantastic part of it. And I think that topic in particular has been one of the most engaging topics for the entire group, if you can get them started.
Yeah. I was going to say, what I tell people, I apologize for interrupting you, is just underwrite extremely clean. Like, don't wait for rates to drop. Like, if a deal pencils now, even if it's just barely cash flowing, then that's the worst it's going to get. Lock in a fixed rate. And then if rates go down, like that's it. I mean, we've heard lots of people say that. So I just kind of pass that along, is just underwrite conservatively. Assume you're going to have higher vacancy rates. Assume that the interest rate is going to stay high. Assume that you're going to have
insurance is going to go up.
Insurance is going to go up. And then if it still pencils, like usually not all of those factors go up at the same time. So they'll have, but like underwrite as conservatively as possible. And if it still pencils out, then go for it, because this is the worst case scenario. And then anything better than that, like it's gravy.
And if everything goes wrong, it will go wrong to everybody. So you have to figure out what to do at that point. So people go, what happened if it goes wrong? Like if it goes wrong, everybody will go the same, and we figure out how to make it work. So
there wasn't, last 20 plus years of investing, there wasn't a single time, even through the major crash that happened, where I was saying, I think I'm not buying real estate. So it was always, what's going on right now and how do I change my strategy to be able to continue to buy, right? So I made the commitment to keep buying, and it wasn't keep buying if all the indicators are perfect, right? So because those almost never line up. We see so many people that's been on the sidelines because interest rates have been terrible, and like, I'm just going to wait for those rates to come down. I'm going to wait for those rates to come down, and prices kept going up and rates kept going up, and now they might never come down. I don't know. I think they're going to get to 10% at some point, and I'm going to be pissed, and I'm going to figure out a way to continue to invest at that point, because the reality is, if you invest, underwrite conservatively, you invest, particularly we focus on cash flow, right? No matter what the market's doing up or down, if it's cash flowing through your strategy, then that gives you an advantage, where so many people might be sitting on that sideline saying, I'm going to wait till next year. Yeah. And that next year almost never comes, because next year when the rates drop, the prices skyrocket. And you're like, I'm not going to compete in this craziness. I'm going to wait till the rates come back down and the prices come back down, or something along those lines. It's just fear holding us back. So yeah, love you guys are having that discourse, because there's so much of that online, right? But that's not real. There's so many fake bots online stirring stuff up, and people just kind of hiding behind their keyboards and saying things. But when you're in person, you can have this dialogue and agree or disagree with people in the room, but get to a conclusion of, all right, doesn't matter what your political beliefs or religious beliefs or whatever it is, we all have different sides of the aisle that we're on. We're all investors. Like, how do we continue to invest, and how do we achieve the goal that we all have in common here? So I love that you guys are doing that as well. We're running out of time here. I just saw the clock here. Might have to bring you guys back. For this. So a couple of things here, a couple of announcements. We're going to give away some prizes, a couple of announcements as well. And then we'll stay on for some questions at the end from the audience, if anyone has any questions that we didn't answer. But super excited. If you're in the chat, put whether or not you attended a Bigger Pockets conference before. BPCon. Yes, no, I know you guys have attended. I've attended with you guys multiple times, I believe. If you put in, if you've attended a BPCon, let us know. Last year was the first year I've missed a BPCon, and I had a conflict, and I was bummed about it. It was in Vegas, right?
Yeah.
I got burnt out of Vegas a couple years ago, and so that helped me to like not move mountains to make that work. But they're going back to Orlando, and by far, it's not even close. The best BPCon I've ever been to was in Orlando. And they're doing it again in Orlando. And I just got off the phone with one of the leaders at Bigger Pockets, and we've been a sponsor multiple times there. So we're partnering with them this year, and I want to work out some sort of discount for our Cash Flow Breakfast Club members. So right now there's early bird pricing, which is $100 off. And if you use the code CFBC, then you get additional $50 off. So you'll get the cheapest price if you want. And it's pretty cool. We usually have anywhere between 10 to, I think one point we had like 30 or 40 people from Cash Flow Breakfast Club all around the US showing up there. So you're part of a club. Even if you're going by yourself, you're like, I'm going there with 2,000 strangers. It's nervous. All right, you're part of a club. We'll hang out. We'll kind of go to things together, and you guys can network in person. So something I'm doing beyond that, if you sign up and you let me know, or my assistant Cam know, that you signed up prior to the end of July, we're going to do some custom Cash Flow Breakfast Club shirts so that you can sponsor it. You show that you're part of this club as well. And we're going to give away some prizes. We've got 2 or 3 minutes to be able to do that as well. I'll give some extra discounts beyond that. So that's October 2nd to 4th. Really, really good event, really good for networking. And there's a lot of education as well. A lot of famous investors that you've probably heard on our podcast are typically there, get to connect with them. So encourage you guys to think about joining BPCon. I'll be there. I think, Anna, you guys are probably going as well. Carlos, I don't know if you guys have looked at your schedule, but definitely I encourage you guys to do that. All right. So last month we missed prizes. We're going to give away some prizes real quick. How do I do that?
What I win?
Yeah.
How bad news? If you win, you never get the prize. This is rich.
Well, that's true. Carlos won last time. Are you guys seeing the prize board here?
No, we see the flyer for BPCon still.
Okay.
Are we going to Universal Studios again?
They have not verified that, but the answer is probably based on talk to them. Yeah, probably. All right. So we got our leaderboards every single month. You guys get a survey. Some of you are great at filling out the survey. Some of you are saying, what the heck is the survey? It's okay. It's fairly new, but just things that we think will help you move your real estate business forward. It's hard to think about real estate once a month and be a consistent real estate investor. So if you're thinking every single week, what am I doing? Whether it's networking, whether it's analyzing deals, whether it's making offers, whether it's finding strategic partners, we give you points for that, and then those points will go into this whatever this is called and spit out some prizes. So we'll pull a few prizes here, and I'm gonna figure out how to do this. All right.
Technical difficulties.
Don't screw it up. Everyone's counting on you.
DK, look at that. DK, I think, might be our all-time leaderboard right now, or close to the top. So DK was on last month. Congratulations, DK. So DK is actually going to get an additional $100 credit towards BPCon. There's no coupon code I can give you. I'm just literally going to send DK $100 to help him go to BPCon, make that a little bit cheaper for him. Let's do one more drawing, a couple more drawings here. Our next. Steven Rodriguez. Welcome, Steven. Awesome. Super excited about that. Steven, we have a couple options for you. Ken will reach out, either a couple signed books, or you can get a $50 gift card to get some Cashflow Breakfast Club swag. All right. And we're going to give one more prize for BPCon here in a second. Let's do one last drawing. And this is for an additional $200 cash from me if you go to BPCon to hang out with our club right here as well. Let's see who's up there. Shante, welcome, Shante. If you're on, great. If not, we'll reach out to you. Shante is going to get a $200 gift card towards BPCon. So that's plus their early bird $100 off, plus a $50 cash for breakfast club. So she's getting $350 off right now. So super excited for that. All right, so that's our drawings for today. Any other last, rigged for DK? Well, he didn't win last month, so and he actually shows me what he does, and he's been killing it. So awesome job, DK. Any other questions that we didn't get to from the group today? I haven't been able to see the entire chat. Nope. Good to go.
I don't believe so.
All right, guys. We appreciate you guys showing up. We appreciate you guys spending your time and hanging out with us today. Show up to your local Cashflow Breakfast Club. If you're calling in from an area without a Cashflow Breakfast Club and you want to start one, reach out. That's what we do. We help you start Cashflow Breakfast Clubs and be of value to your community as well. So thank you guys for showing up, and we'll see you next month, the last Wednesday of the month. Thank you, Anna and Brian, for sharing and being vulnerable and giving us lots of amazing lessons. Thank you, Carlos, as always, for being a great co-host and great questions. And
just want to thank Anna and Brian. And when can people follow you? When can people listen to the podcast?
Oh, so Nico Garcia and I have look at that. Oh, that's a terrible picture. I need to change that. So that's my handle. Everything is _realtor or realtor somewhere. And then the agent, the #2 investor podcast is on anywhere like Spotify, Apple, wherever you listen to podcasts, you can find it there. Omni's been on a couple times. Carlos, we were going to hit you up to be on next time. So you'll
Definitely. We'll love to.
hit you up for that. So that's me. And then usually if you want to get to him, you just message me because he's usually locked in a hole. But he'll have to start working on that soon. He'll have to do his own social media.
Yeah.
She's my social director. So
now he's gonna have a new boss who's gonna be hotter than the previous one.
Yeah, great podcast. If you're an agent out there, if you're an investor agent, reach out. They probably would love to have you on the podcast as well. But a lot of good nuggets that they put out there. So thank you guys for being awesome. Thank you guys for leading an amazing community out there in Arlington. And thanks everyone for showing up. We'll see you guys all next month.
Yeah, thank you for putting this all together. This is all your fault.
God bless you all.
Thanks.
Thanks, guys.